Hey everyone, welcome back to Corporate Decoder. Today, MCAHU filed an 8K announcing separate trading for its units, and I am seeing a move that often signals what is next for SPACs. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is a small but important step for Mountain Crest Acquisition, M.C.A.H.U Corp, and it really highlights a common path for these types of companies. So Mountain Crest Acquisition M.C.A.H.U Corp, which trades under the ticker M.C.A.H.U for its units, has just announced that its units will start trading separately. What does that mean? Well, before this, if you bought a unit, you got a package deal, one ordinary share and one right to get a fraction of another share later on. But now, the company is saying that starting around the 22nd of June, you can buy and sell these shares and rights individually. This move is pretty standard for companies that have gone public through what is called a SPAC, or a special purpose acquisition company. What they've essentially done is created a way for investors to trade the underlying pieces of their deal. The ordinary shares will trade under the ticker M.C.A.H.U, and the rights, which give holders a chance to get more shares later, will trade under M.C.A.H.U if you hold the original units. You don't have to do anything, they'll just keep trading as M.C.A.H.U. Now, why does this matter for investors? It can offer a bit more flexibility. Some might want to hold just the shares and sell the rights or vice versa depending on their outlook for the company. This also means the market will start to put individual prices on these different components, giving us a clearer picture of how investors value the core business versus the potential upside from those rights. The filing also notes that Mountain Crest Acquisition M.C.A.H.U Corp is an emerging growth company. This basically means they get to follow some simpler accounting rules for a period of time, which is common for newer public companies. They've also elected not to use the extended transition period for new or revised financial accounting standards, which means they'll adopt new accounting rules sooner rather than later. It is a technical detail, but shows they are moving towards full compliance. This type of announcement is often a precursor to a bigger event for a SPAC. After they start trading separately, the next big step is usually the de-SPAC transaction, where the SPAC merges with another operating company. This filing is more about making their structure cleaner and more tradable before that potential merger. It's like the company is getting its house in order. So, what is Mountain Crest Acquisition M.C.A.H.U Corp actually doing? Back in April, they went through an initial public offering, raising about $60 million. These SPACs are essentially shell companies that go public with the sole purpose of finding and merging with a private company. So, the real story from M.C.A.H.U is not so much about its own operations right now, but about which private company it will eventually merge with. The separate trading of units is a step in that process. Looking at this from a broader perspective, the separate trading of units is a common move in the SPAC world. It is a way to unlock value and provide more trading options for investors. Historically, when SPACs begin to separate their units, it can lead to a period of price discovery for the individual components. For a SPAC still looking for a target company, this might mean the market is anticipating a merger announcement. However, it's also important to remember that many SPACs, especially those with smaller IPOs like this one, face significant headwinds after their initial merger. We've seen many instances where, after the de-SPAC event, the stock price declined sharply. For instance, many SPACs that merged with sub-$500 million market cap companies have seen a 70 to 90% drop in value in the year following the merger. So while this filing is a routine step, it is part of a larger narrative for SPACs. The real excitement or concern will come when M.C.A.H.U announces the company it plans to merge with. Until then, this is just them setting the stage. The biggest risk I see is that the market is flooded with SPACs, and finding a truly valuable target in this environment can be challenging, leading to potential underperformance post-merger. What I'm actually looking for is the announcement of their target company and the terms of that merger. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord for more.